I'm sure by now you're thinking about it. Maybe you did before, but then you forgot. And now you're thinking about it again. Gas prices. Have you paused for a moment to wonder why you forgot how upset you were the last time they were high? What was the cost back then? Do you remember? And why did you calm down, move on, lose attention to the matter? Because they went down, but not all the way. Recently, you have heard right-wing commentators say things like this.
Tomorrow, President Obama will speak in Miami about gas prices, but he is likely to have no solutions. If the Obama administration wanted to, it could ask Congress to raise export taxes on the oil companies to encourage them to sell their products here.
And the left wing responds with this.
Because there's no president in the short term that can really change policy and impact gas prices in a significant way.
Yet when Bush was president, you heard the left wing say this.
Gas prices have more than doubled since George Bush became our president. Elect Democrats in November. If you don't like these outrageous gas prices, if you feel that the oil companies have been given a free ride by the president and the vice president, vote for Democrats who will vote for changes in our energy policy.
And the right wing said this.
The next time you hear a politician say he or she will bring down oil prices, understand it's complete BS. If Americans want lower gas prices, cut back. Sell those SUVs. Ride a bike when you can. If every one of us bought 10% less gasoline, prices would fall fast.
They take all of that confusion and then throw in speculators, supply and demand of the global economy, tensions in the Middle East, and so forth. Do these factors impact the price of gasoline at the pump? Sure they do. But they are also a convenient obfuscation of the real truth behind this precipitous rise in cost. So what is the real truth? The truth of the matter is that gas prices have been increasing at a ferocious pace since 1973. And what happened back then? Oh wait, I remember. This guy happened. You see, up until this point, the precious metal gold had been linked to the US dollar at the rate of $35 an ounce. Governments and their citizens all around the world shared in the confidence that 35 US dollars represented 1 ounce of gold. On August 15, 1971, President Richard Nixon took the United States off of the gold standard.
I have directed the Secretary of the Treasury to take the action necessary to defend the dollar against the speculators. I have directed Secretary Connally to suspend temporarily the convertibility of the dollar into gold or other reserve assets, except in amounts and conditions determined to be in the interest of monetary stability and in the best interest of the United States.
Now, the Federal Reserve was free to print all the funny money that they could, with no worry towards the amount of gold in the possession of the U.S. government. These guys didn't like that very much. And why not? Well, let's take a look. This is a chart of the US M2 money supply. And this is when the change happened. This is a chart of the US national debt. And this is when the change happened. This is a chart of annual gas prices. And this is when the change happened. Let's break this down into simpler terms. A gallon of gas has always been a gallon of gas. An ounce of gold has always been an ounce of gold. So what has changed in this equation? The dollar. And why is that so important? Because oil is traded in dollars. Oil is pegged to the dollar bill. Prior to the Nixon administration taking the U.S. off of the gold standard, everyone knew exactly how much gold value they would get for selling a barrel of oil. Let's say, for argument's sake, that back then a barrel of oil cost $35. That, at the time, was directly exchangeable for 1 ounce of gold. When the gold standard went away, the U.S. government, in concert with the Federal Reserve, inflated the national debt and money supply, and it has been on a rocket ship trajectory ever since. To continue our example, let us say that you doubled the amount of dollars in circulation. What happens to that barrel of oil? Well, it's still a barrel of oil. But our oil-producing friends aren't fooled by this. You just doubled the amount of dollars in circulation. This halves the value of all of the other dollars that existed before the increase. It also halves the value of that $35 our oil-producing friends were collecting for that barrel. Well, they're not just about to lose value, now are they? For the value to remain even, they double the price to $70. So you see, the more money we print, the higher gas prices will go. Priced in gold 50 years ago, 1 ounce bought a little more than 100 gallons of gas. Today, an ounce of gold buys nearly 423 gallons of gas. Let me show you this debt chart again. So where do you think the gas prices are headed? You know who doesn't mind this too much? Our state and local governments. And why is that? Well, you pay tax on each gallon of gas that you buy. And when the gas prices are higher, we are filling their coffers ever more quickly. This will continue as long as the Federal Reserve continues printing money. Something else you may not be aware of. The Federal Reserve is no more federal than Federal Express. You see, the Federal Reserve is a privately held entity. It is very secretive with respect to its inner dealings and does not have to answer to public freedom of information requests. In fact, the first audit ever of the Federal Reserve by Congress, and it was only a partial audit, revealed that $16 trillion had been secretly given out to U.S. banks and corporations and foreign banks everywhere from France to Scotland. How deep does the rabbit hole go?
Would you mind repeating the question one more time?
What have you done to investigate the off-balance sheet transactions conducted by the Federal Reserve, which, according to Bloomberg, now total $9 trillion in the last 8 months?
I'll have to look specifically at that Bloomberg article. I'm not, I don't know if I have actually seen that particular one.
That's not the point. The question is, have you done any investigation or auditing of off-balance sheet transactions conducted by the Federal Reserve?
At this point, we're conducting our lending facility project at a fairly high level and have not gotten to a specific level of detail to really be in a position to respond to your question.
Chairman, my time is up, but I have to tell you honestly, I am shocked to find out that nobody at the Federal Reserve, including the Inspector General, is keeping track of this.
$9 trillion missing from the Federal Reserve. $9 trillion. Before President Obama took office, gas was $1.80 per gallon. Now, it's $3.93 per gallon and rising. But what about that shiny, precious metal we spoke of earlier? Well, now that's an interesting question. Did you know that through the Emergency Banking Act of 1933, which President Franklin Delano Roosevelt ordered and Congress passed on March 9th, without having read it, gave the Secretary of the Treasury the power to require all individuals and corporations to hand over all of their gold coin, gold bullion, or gold certificates if, in his judgment, quote, such action is necessary to protect the currency system of the United States. House Minority Leader Bertrand H. Snell stated that it was, quote, entirely out of the ordinary to pass legislation that, quote, is not even in print at the time it is offered. Nevertheless, he urged his colleagues to pass it, stating, quote, the House is burning down, and the President of the United States says this is the way to put out the fire. And to me at this time, there is only one answer to this question, and that is to give the president what he demands and says is necessary to meet the situation. Pass tremendously far-reaching legislation without even having read it because, quote, the house is burning down? Does this sound familiar to anyone?
But we have to pass the bill so that you can find out what is in it away from the fog of the controversy.
Well, now that it's passed, and we've had some time to read it, guess what's in it? Section 9006, a provision requiring any gold transaction over $600 to be reported to the IRS. So the government is now tracking your gold purchases. Looks like if the ghost of FDR comes back from the grave and wants gold, you'll know where to find it. They buried this in the 2,000-plus page healthcare law.
We say that oil prices have doubled since Obama took office. Well, the fact is that what's happened is the dollar has lost half its value since Obama took office. And since oil prices are denominated in dollars, the price rose. It still costs about 16 barrels of oil to buy an ounce of gold. That's what it cost in 1948. That's what it costs now. So stop printing money. Obama has tripled the money supply since he took office. And the result is nobody's got faith in the dollar. Its purchasing power is crashing. And the price of oil and the price of gasoline is skyrocketing.
It's time to wake up. We are on the eve of something big. The signs are all there. We just have to read them.